Good morning, everyone. Thank you so much for showing up today. For those that don't know me, my name is Al Robinson with LaPointe Insurance Agency. I encourage all you guys and gals to grab some coffee and some donuts. Insurance right now especially is a very turbulent time. That's kind of the term I've been using over the past year or so. Just like the real estate market, there's been so many changes with the way that things are being done, and not just from a pricing standpoint, but a lot of companies are now looking at, do they want to insure certain things, whether it's properties, automobiles, boats, et cetera. And this is at a national level, not just locally. So if you've had experience with insurance or catastrophes over the past year with insurance, there's so many reasons why. I don't want to talk about the mishaps today more so in the industry, but today I want to really talk about how I can help you. As a real estate professional, you've probably come across some properties that clearly probably need insurance if someone's buying a home that has a mortgage. And there can be some standstills. And if they're not addressed the right way, there can also be some downfall. So I don't expect you to retain all the information that I put out today. It's gonna be a lot, but I expect you to take maybe one or two nuggets from this today. And if you can do that, I think you'll be set up really for success when you're either showing homes or in open houses or helping your clients buy their dream home, And I think the one thing I've learned over the past year in this real estate market is that, we're all in this together. If I can help you get to the closing table because we resolved an insurance, issue, that's a win for me. So without further ado, let's get into it. So one of the things I always ask when I do these seminars with real estate people are, kind of what does an insurance agent do? I was actually with a bunch of realtors yesterday, and the question I had asked is, when you think of insurance or LaPointe Insurance Agency, what's the first thing that comes to mind? And somebody in the crowd was like, oh, you guys get me the binders. And yes, that is what we do essentially. One of the many things that we do, but we do way more than that. When you work with an agent, it's not just getting a binder to your buyer or to your mortgage lender, but we also service that account from start to finish. So if that client has questions on the home insurance policy, if they decide in a month, 2 months, 3 months that they want to buy a vehicle or buy a boat or buy a motorcycle, we do all that stuff too. And not just on the front end, but on the back end as well. When it comes to collecting payment, making sure your policies are paid on time and accordingly, making sure they're serviced the right way, they're updated. That's all something that an insurance agent does. So again, when you think of insurance agency, you think of a one-stop shop when it comes to your policies. I think the best part of my job as an insurance agent is really this two-part equation, right? It's making sure people understand insurance or have some insight on insurance when they're going through a transaction with us, but I also like to make insurance fun again. And I think one of the things that I've learned again over the past few years is that, insurance can be super boring. It's definitely not like the best talked about topic, at the Thanksgiving table. But we try to make it as fun as we can and more so relatable. So some of the stuff we've done over the past few years, I've shown here just some clips of the videos that we've done. I guess my 5 seconds of fame was probably about 5 years ago. I shot a Fresh Prince video parody that took off. But it's more than just that. We try to keep insurance not only fun, but relevant too. We just did a Halloween shoot a couple weeks ago, which is super fun. So if I can throw a shameless plug into Namra Consulting, they really help us shoot these things. And Dan Simcock from our office, just phenomenal behind the camera and getting these things set up. And I honestly can attribute this stuff really to our success because I think, again, people find it more relatable. And they want to work with people that they understand the concept and make it as relatable as they can. So we try to make it fun as well. So again, kind of what we do, how we do it, I kind of talked about that briefly. Again, when you call an insurance agent, you work with an agent, it's a one-stop shop when it comes to insurance policies. Again, we handle everything from home, auto, to the motorcycles, the boats, the RVs, ATVs, campers, trailers, business insurance. We do BOP insurance, general liability, a lot of E&O stuff. So again, we encompass all of those things. When you work with an agent, again, we shop the policy around for you. So we're licensed in all of New England. We have about 20 or so companies that we do right amongst all those states. And again, it's a two-part equation. We not only shop it around for you, get the best bang for your buck, but also want to make sure you have the right amount of coverage for what you're trying to insure. When you call a company like, I always use Geico as an example, Progressive as an example, they're gonna give you a price, but it's really their only price. It could be their best price, but they're gonna say, all right, this is all we have, boom, here's the price, take it or leave it. You know, when you have an agent, you kind of have, I tell people, like, you kind of have that box really built around you. You know, we realize that every client has different needs, different wants. When you're buying a home especially, you know, we kind of have to create that box around the buyer because there are certain things that the buyer may or may not want to include. Every person is different, they have different needs. So working with an agent really helps us do that. You know, it helps you, you know, build that box around you, and again, gives you kind of what you need, and helps you pay for what you need as well too. So what we specialize in, again, you know, today is really about the real estate side of the transaction. We do specialize in kind of that home insurance policy. And home insurance right now, again, is such a gray area. There's so many types of different home insurance policies that you can get. It's our job as an agent to really help you find that out. And as a real estate agent or a mortgage lender, you may not know the difference. You know, if you're buying a single family home, let's say, that policy is gonna look way different than, you know, a condo policy or a home under construction or a two-family home or a home that you're buying as an investment property. So it's our job to figure that stuff out for you, but it's also our job to make sure you're educated as to why. You know, and the why behind why policies differ is there are a lot of reasons, but mainly from a liability standpoint, that's the biggest reason. You know, if you're buying a home that you're living in, the liability on that home is gonna look and act a lot more different as opposed to a home that you were buying as an investment property, you know? And as a realtor, you may or may not know that. You know, we shouldn't expect you to know that. But when you kind of explain it to people like, hey, listen, you know, if you're not living in the home, the liability is gonna act different because of this, this, and this. So again, we specialize in the home insurance side. You know, the big three things that we always focus on are their accuracy, the reliability, and then the speed. You know, as a real estate agent, as a mortgage broker, you know, you need that home insurance binder to close. You know, it's our job to ensure that that does not hold you up. You know, it gets you the binder that you need, gets you in the door, gets you out, and you can close on time. The big question that we always get, and this is one of the points that I think if you can grab one thing from today, it's understanding this concept, because I do feel like realtors and lenders, even if they're seasoned, don't pick up on it right away, is the fact that what someone's buying the home or the property for is not how it's insured. So your market value, your appraised value, what the home is worth, what the person's borrowing, that is not essentially what the home is insured for. We go by what we call replacement cost. You may see it called ACV, you may see it called RCE. Again, MSB, those are all terms that an insurance agent would probably use. You may have heard those terms before, but all we care about is if this building burns to the ground, how much does it cost to recalculate this building? Again, every company rates an MSB or an RCE differently. You know, company A might say it's 470, company B might say it's 458, company C might say it's 430. So it's kind of like when you call a general contractor to redo your bathroom. If you call 5 or 6, you know, different companies, you're gonna get 5 or 6 different prices. It's the same thing when it comes to MSB. Things to keep in mind, you know, older homes that have, you know, the crown moldings, the older components, again, all the company cares about is to get that home back to its functioning replacement cost. What is it gonna cost? We don't take into account what's inside the home as far as like furniture, TVs, all that stuff. That's a different part of your home insurance policy. This is strictly frame, base, outside structure, inside structure, drywalls. Again, it's all broken down here. I'm not gonna get into the weeds of it, but this is typically what, you know, how it's calculated. Again, the big things to look at is the square footage of the home, right? And the cost per square footage in that area. That does vary based on town. Again, a home in Barrington, Rhode Island is gonna be probably different than a home in Providence, Rhode Island. Again, it's all calculated amongst the company that is essentially doing the MSB. I think I want to change screens here because I think one of the things I always like to touch on too, essentially, is what a home insurance policy looks like. And let me pull this up because I think this is important too. And again, you know, I don't expect anyone to retain all this information, but this is actually a policy for one of my properties. I'll hopefully you can see that.
I'll have a question real quick.
Yeah.
So replacement cost, let's say it's 400,000.
Yeah.
House burns down. They get a check for 400,000.
Essentially, that would happen.
Okay.
Yeah.
Even
Yeah.
though
If it's a total. Yeah. So if the company deems it a total loss, whatever is bound on that policy under your coverage A dwelling amount is what you would get paid out for.
So the new AC unit that's outside that didn't get affected, does that get deducted from the whole?
It would. Yeah.
550?
It would. If it was a total loss, though, you're getting paid on that stuff too. So if it's a covered peril, so fire, right? Covered peril, the place burns to the ground, you're losing an HVAC unit, a generator, let's say. That's all essentially should be accounted for in the ACV. So, and I'll get into why when we quote those things are important, because that's gonna, like the AC unit, HVAC is always gonna be on your MSB for every company. But if the home has, a whole home generator that's not on there and the place burns down and you lose that, if it's not on there, you're not getting paid out, right? So again, basic home insurance policy, if you've seen a binder before, you're gonna see some of this stuff, typically not all of it. When it comes to qualifying for a mortgage, really all the lender cares about is the premium, dwelling amount, the perils that are covered, does it include wind and hail, and deductible and liability. Depending on how the loan is structured and how your buyer is buying the home, if the client's buying a home as an investment property, this loss of use turns into what we call loss of rents. And there are certain lending companies that require a certain percentage. It's usually around 40% of the dwelling amount, depending on, again, how that person's qualified for a loan. So again, these 6 coverages here, A through F, are your basics. Again, dwelling is the home's rebuild value. Other structures, coverage B is, again, stuff that's not attached to the home. So fences, garages, sheds, gazebos, above ground pools are all your other structures. Personal property, you're in a home where you bring all your stuff in. So tables, chairs, clothing, electronics. I tell people, if you cut the roof off your home, picked it up, dumped it upside down, whatever falls out is considered personal property. A quick note on that, years ago, insurance companies would want you to take an inventory of what you have in your home. And that's a question we get all the time is, well, how do you know what this is worth? They really don't. It's kind of in a total loss situation, they're gonna cut you a check for whatever you have there. So in my case for this property, it's $225. And they're gonna say, go out and refill that home with what you had, here's what you get. What I recommend for people, especially first-time home buyers, is if you're buying a new home, right? When you're moving in or when you're moving out of your old home, take the pictures then, because there might be in your new home a closet or your old home where you forgot about you had, 10 grand worth of clothing or shoes, and that needs to be accounted for. So the best time to do that is, in my opinion, is when you're buying the new home. If you use a moving truck, take a quick video, take a quick photo, because in the event of a loss, you're gonna wanna have those things replaced, right? Loss of use, like I said, we covered that a bit, can also be considered loss of rent if the property is an investment property. That pays for alternative living. So if your home is involved in a claim, fire, for example, where you cannot live there, and you need to rent a hotel, an Airbnb, that is what pays for that. This will also pay for living expenses. So if I have a fire in my home and I have to rent an Airbnb or a hotel, for example, that's a better example, and I can't cook in that hotel room because there's no kitchen, but I have to order food, those expenses are also covered by loss of use as well. Okay, so keep that stuff in mind. Personal liability, this covers you in the event of a lawsuit. So if somebody slips and falls on that property, gets hurt, that's where the liability comes into play. Personal liability in most cases is worldwide liability. So what does that mean? We had a situation about 3 or 4 years ago. A guy went over to France, Paris, France. He was in a hotel room. He clogged a drain in that hotel room, flooded the whole room. His personal liability actually paid that claim out. So personal liability is also worldwide in most cases. If, example I always use here is, if I'm on the golf course and I hit a ball and it hits somebody and hurts them, yes, liability will usually pay for something like that. It's a worldwide coverage unless it's written differently on that policy. So keep that in mind, okay? Medical payments, this is what a goodwill payment. So in the event of a lawsuit, most companies are gonna kick that medical payment out to you first. So I injured Camille on the golf course, he has to go to the hospital. The first thing I'm gonna say is, all right, you got medical pay $5,000. Let's give that to Camille off the rip and let's kind of see where it goes from there. So it's kind of like a goodwill. Is it to negate a lawsuit? I don't wanna say that it's there for that, but it's to really help cover those quick hit medical payments if it's needed. Best advice here, again, I always offer coverages that have a $500,000 minimum for liability. To go from $500,000 to $1 million, we're talking pennies. Again, on this property, I think it cost me like $20 for the whole year. So keep that stuff in mind. Again, it's not mandatory when you're buying a home, but $1 million in today's terms is peanuts. People are suing people for way more than that. I taught a class yesterday at another brokerage, and I told them $1 million, unfortunately, as sad as it sounds, is not a lot of money. I know it's tough to say it like that, but when it comes to people's feelings or property or damages, It's very minimum. So my best advice is if your client can't afford to stick with more than $1 million, or if it's offered, do that. Can always be changed down the road and updated, but it's always better to have more than to not have enough at all, you know? All right, cool. Let's get back to the presentation here. So when it comes to buying the home itself, again, I don't go out and look at every home that I insure, and most companies, as I'll talk about here in a second, are gonna go out after your closing with your client to inspect these homes. But the due diligence ahead of time, especially right now with the way insurance is, I can't stress this enough, is so critical. Again, I'm not inspecting every home. Most times when I do a quote and bind a policy, it's from the client themselves telling me about the property itself or Zillow. Let's be honest, how accurate is Zillow nowadays? We just talked about this earlier. You know, with AI, you can put lipstick on any pig and make it look beautiful. So we have to keep our eyes and ears open for that stuff because yeah, like when you come across these standstills, at some point it's gonna come back or could come back to bite the client in the butt. And you know, the last thing you want as a lender is, you know, we bind a policy, you close, and then 6 months later, John Smith's calling you going, hey, like, why is ABC Insurance canceling me? And what's this knob and tube that's in my home, you know? We've had that.
It's a big one.
You know? So I could talk for 8 to 10 hours on standstills. What I do want to cover is just some of the big ones that we see day in and day out. The first 2 pictures, right, on the left-hand side, does anyone know what those are?
I'm gonna say knob and tube, and then that's the old circuit breaker, whatever, fuse box.
Bingo.
Screw in fuse.
Yeah.
Bingo, right on. So knob and tube and fuses are a very old way to provide electricity to a home. Again, knob and tube, it's exactly as it sounds. You have these tubes and then knobs that connect electricity through the home. It's literally like almost up against the wood. It is by far the riskiest way to provide electricity. All this stuff is live wiring. When you hear that and see that, it's an absolute insurance nightmare. There's one company right now in Rhode Island that will insure with knob and tube, and it's the Rhode Island Fair Plan Insurance. It is extremely expensive. I just did one this morning for a multifamily home in Woonsocket. It's a $10,000 insurance policy. So do you want to tell your client, hey, it's gonna cost you 10 grand to insure this home? I know if I'm a lender or realtor, I don't. So what do? You know, you see this stuff, it definitely, and again, like as a lender and realtor, you don't want to scare your client, listen, like this is gonna be a problem, but at some point it's gonna come back to bite them. With the knob and tube and the fuse, like this stuff right here, and again, I'm not an electrician, but I can tell you right now, this stuff right here is probably gonna run your client, what, Camille, a couple thousand maybe to get it removed?
10,000.
To get it removed, let's get it removed,
Yeah.
you know? And this is an extreme case. I've seen it where you have a couple of just inlets that work and it's $200 to get it removed, you know? So again, if the client has plans to remove this stuff, you know, the old school electric, do it. Because we can go to way more companies knowing that it won't be there, and after closing, when they inspect the property, they're going to be clean and clear, you know. So if you see those things, again, you don't want to sidestep them as a realtor, but definitely want to make sure that they know, listen, like to get insurance on this property, you're going to probably have a hard time, but let's figure out a way. You know, can we get a seller credit? Maybe they can pay for it. You know, if it's only minimal knob and tube or just fuses that can be transferred over, you know, and it's a couple $100 to fix it, do it. You know. So that's the big one we're seeing. Again, the third picture in here, multi-layer roofs. About 4 or 5 years ago when I first started in this industry, you know, with this company, it wasn't a big deal. Now it's a big deal. Why? So over the past year, roof claims in certain markets have gone up about 70%. So what does that mean? It means that more people are filing claims for their roof. When you have to file a claim for your roof, yeah, and the roof needs to be replaced, to strip off all this stuff here is gonna cost you way more money because your roof is gonna charge you to strip off those layers. Rule of thumb is 2 layers when it comes to insurance. It's not a big deal. Depending on the company, more than 2 layers can be a problem. So it can be tough, and I get it. Like as a realtor, most times you're not climbing on your roof looking at the number of layers shingles, but this is probably, looking at this photo, it can definitely be seen from eye level. I think most homes you can see something like that from eye level. You don't need to climb on your roof and notice that there's 6 layers of shingles here. So that's something you want to keep a lookout for because over the next year, I can promise you companies are going to be cracking down on that way more, you know. The last picture, right? Wet basement. How often do you guys see that stuff? I mean, I'm sure all the time, right? Why is that important? So whenever you have a wet basement, right, or leaking in a home insurance policy is never gonna cover you for water in your basement, right? That's a separate policy, which again, I'll touch on here in a minute. But, and this can be tough to spot. You know, if you're looking at homes on a dry day, you may not see something like this. Again, we had like the worst rainy summer, I think, in like 40 years up here in Rhode Island. So this was probably a very common thing that we've seen. But if you see this stuff, yeah, I mean, as a realtor, you definitely wanna make sure it's addressed and noticed. You know, in one of my homes, I get water in the basement if it rains for like 2 or 3 days. Yeah, like if we get like a week's worth of rain, yeah, that could be a problem, you know? So I would say not so much, definitely something you wanna be worried about and look at. But again, the client needs to understand that, you know, if it rains and this pools up here and, you know, kills the water tank, the client's not gonna be covered, you know, because that's a different type of policy. Unless they get a flood insurance policy, they're not gonna have the right coverage they need to protect those things. So you see these things again, you address them. You know, there's a lot of ways to kind of skirt this stuff, which again, from an ethics standpoint, I don't agree with. You know, I feel like if the client knows about these things ahead of time and they're being addressed, great. If they're not doing anything about it, they're gonna have very limited markets when it comes to getting them the right price. And you know, I'd rather tell a client, listen, like if you're gonna spend $1,000 to save $5,000 on your insurance policy, I think most of us would probably take that all day long, you know? So some of the common things to look for as well, I call these really the ancillary things. These are things that not necessarily are in the home, but can typically be removed from the home. And again, these are kind of really the big 6 that I see. Whenever a client comes to me for a quote, we always ask them, does the property have a pool, koi pond, solar panels, trampoline, dogs, under renovation? Those are kind of the big 6 things that we look at. Surprisingly, most of these things on here, right? So like pool, solar panels, trampoline, and having any dogs doesn't really change the policy much from a pricing standpoint. It really just changes the carrier. Why? So I always talk about dogs, right? So dogs, again, I'm a huge dog guy myself. You know, I get it, and it's tough for me to tell a client, hey, listen, like, you know, you're not covered because of your dog. I think that's not fair to some people, but I see the logic behind it because I'm an insurance agent, right?
You gotta get rid of it.
Yeah, and that's the thing, right? Like I have had clients say, listen, like we're getting rid of our dog. And it's like, well, listen, like logically, right? Like I'm not gonna make you get rid of your dog because you can't get insurance. Let's find a company that will take your dog. You know, again, ethics is just, I can't tell somebody that, but I've had clients like get rid of their dog, you know? Do I agree with it? I don't agree with it, but I'm a realist understanding the concept behind it. So it's not necessarily gonna change the price a lot. I would say the only exception is probably solar panels, because solar panels, depending on if they're leased or owned, can change the company that we write with, and can also change from a liability standpoint if you're covered. Leased panels are never covered by home insurance. Why? Because leased items are not a protected item on a home insurance policy. They're always excluded. If they're owned, they're covered to a certain extent. Now we're seeing, as crazy as it sounds, from a liability standpoint, there are companies that will insure the panels themselves, but if that panel falls off that house and hits somebody, will not cover you for liability. So there's so many nuances right now, and that's why it's important we understand these things, because again, if your client has a home that has solar panels, I can't say, hey, you're covered, because if they are covered for the panels themselves but not for liability, then I'm the bad guy. So it's important we find all these things out ahead of time, because again, they won't change the policy more so, but they may change the company that we can actually write with, okay? Farm exposure is a big one too. Again, people that have horses and pets, you know, how are those pets being used? Is it just being used for your family themselves? Are you using those pets for rides for the general public? You know, are you selling the eggs that your chickens produce? So it can kind of open up a variety of questions that underwriting asks, and we're only asking because we're getting asked those questions, you know? The last one here, renovations. Again, a huge topic. You know, again, I'm a realist. I get it that most homes right now, clients are going in, buying them, and then doing renos themselves. That's fine to a certain extent. The big thing that a lot of companies are looking at are, you know, what type of renovations are you doing? You know, are you knocking walls down? Are you adding stories? Are you just ripping up carpets and just doing drywall and painting? You know, from the minor cosmetic standpoint, companies aren't gonna be too picky about that. It's the, hey, you know, I bought this home, I closed on November 8th, and November 9th, I have a GC in there ripping walls down, ripping down load-bearing walls, adding a story. Again, home insurance policy is not gonna cover you for those types of renovations. Different type of policy for a different type of home. So, any questions on this stuff? I know this can kind of be gray. But I think, my point here is the fact that, if you have these things in the home, they're not staying. So like pools, trampolines, I know like, a lot of these pools nowadays are like pop-up pools. So like, again, don't be afraid to ask, because most times it's not gonna change a client's policy. It's just gonna change either the company that it can be written with or the liability on that. So any questions on that stuff?
The solar panels, they should, if it's leased or loaned, they should include the insurance in it.
Yeah, and a lot of times that is a question like, we've had it before where the home has solar panels. Hey, Justin, are you wrapping this loan into, the loan for the solar panels into the loan, right? Like I've asked you that before.
100%.
And that's the reason why, because if at that point, they'd be considered owned. So I can quote this property, I can add the MSB to those solar panels, because again, that MSB, if the home has solar panels, needs to include those. So we go by the wattage, how many panels, like it is and can be intricate, I think most times when someone's buying a home with solar panels, and Justin, you might know the answer to this, is how often is it wrapped into the loan? Is it almost every time?
It's actually crazy you bring this up, because the last closing I had, actually, we ran into a problem. So this is obviously the solar thing is going to be a new thing. Right?
Yeah.
So we're going to start seeing a lot more of it with the recent hikes. It almost doubled everybody's electric bill.
Yeah.
So we're going to start seeing a lot of this. What I didn't know until just recently is if they're leased, as a realtor, you guys almost want to go out of your way to see if the lease can be transferred to whoever's trying to buy the home before you even sign a contract. I just had a situation where both the borrower and co-borrower, they were approved to buy the house, but oddly enough, they were both denied for the lease transfer of the solar. Could have been a deal breaker. Fortunately, the woman selling them the house was super generous. She came out of pocket an additional $18,000 out of her proceeds to pay it off.
And then they were owed at that point.
Dead deal.
Yeah.
And it was just because, for whatever reason, the solar companies are really, really strict, even more so than lenders when it comes to DTI and credit scores.
Transfer
so
over.
You would think, one of the bars had like a 750 score. And she owned like 2 properties.
And they didn't qualify for solar?
She didn't qualify.
That's crazy.
So
that's good to know too. Yeah, that's good to know too.
By some of the other agents that I work with that, hey, anytime you have a property with solar, initiate the solar transfer. I have them put in an application to see if they even qualify before you put them under contract.
And that's underwriting. That's gonna be an underwriting question for you guys now, right? It's probably more common. Yeah, that's good to know.
Such a pain.
It is.
Such a pain.
Yeah.
Solar.
It's crazy.
So again, we'll kind of go into, briefly I touched on it, but why does the type of property matter? Well, again, I'm not going to insure, a single family home like I would a 3-family or a condo or a mixed use property, the same way I would a rental property. A big topic right now, and I think one of the things that I've learned over the past couple of years is, when it comes to insurance and changes, insurance companies are like the last line of defense to change their policies. The hot topic right now when it comes to insurance is Airbnb and Verbo. The term we use is STR, short-term rentals. There's many companies that are not doing short-term rental insurance policies. Why? Because the liability changes substantially. Quick real life story. 2 years ago, I had a client call me for a property they were buying in New Hampshire, right across the street from Loon Mountain. Had told me the property is being used as a secondary home, no rental. We quoted it, bound the policy, good to go. 3 months later, he's calling me saying that somebody fell in the property because he put his home on Airbnb. Again, it's a nightmare from my standpoint because I'm telling this guy, listen, you didn't tell me that it was Airbnb. And he did admit that he'd never told me because I had it in an email. So yeah, the sad part here was this guy, had a lawsuit on his hand. It ended up working out. I think personally it was an inside job if you ask me, but yeah, ended up working out where this guy could have been on the hook for a huge lawsuit because of the fact that his policy does not cover Airbnb. Again, I guess shame on me for maybe not assuming across from Loon Mountain he's probably using it for like skiers, in short term, but it was not presented to us that way. And again, it did fall back on the client. My point being, as a realtor or a lender, if you know these things up front, it's gonna happen. And again, it may not, if we're closing on a home today and that person's not Airbnb-ing it until 3, 4, 5 months down the road, definitely let them know, listen, let your insurance agent know this needs to be written the right way because the liability on that home is not gonna cover you. Yes, Airbnb and Vrbo do offer liability through the app itself. It's pretty minimal. But a lot of companies now, right on the underwriting and the application, is this home being used for any short-term rental? And if the answer is yes, if they write it, great. If not, you got to find a company that will write it for you. Student rentals, subsidized housing, again, that's a huge another topic. Whenever I look at a home that's near like Brown, PC, RISD, I'm usually asking the question, hey, like, it's tenant occupied. Are these long-term tenants? Are they students? Most of us have been to college and know that students don't take care of homes as probably good as they should. I'll be the first to tell you that. When I rented an apartment in college, it was not the cleanest and the tidiest, but that's why. Most of these homes that are rented to students, 3 families, they're ripping up carpets every year. They're replacing drywall every year. My parents have a place down in Myrtle Beach right on college campus. They're doing those things every year, so let us know. Again, it's not something that's not going to get found out anyways. And again, a lot of these inspectors that go out to inspect these homes after closing can tell, they get paid to inspect. They know what students, I hate to say look like, but they know how they act. They know how they, live in a home. So let us know about those things. Again, every policy is going to be different based on the property itself. Okay. Any questions there? So this is one of my favorite parts of doing these is telling people what's not covered by your home insurance, as bad as that sounds. And again, there are so many exclusions on a policy. I want to cover just the ones I see day in and day out, and there may be some more that kind of come up over the course of me talking about this, but there's really 5 or 6 of them. We talked about flood earlier, right? So flood insurance is not covered by your home insurance policy. Again, if we get a week's worth of rain and your basement floods, garage floods, your home insurance policy is never going to cover you for that. Depending on how the policy is written, right? And we'll talk about flood in a second here. There are circumstances where the flood is an above ground or in ground pool that breaks and backfills. I've also seen claims be denied because of that as well too. So we'll cover flood here in a second at the end, but keep that in mind. Again, we see a home, if you guys do open houses, you see a home that has, wet basements, definitely something you want to point out. I don't want to make it a deal killer, but you also want to tell your client, listen, don't worry about it. Like, just call your home insurance company and file a claim, because they're going to say, well, you're not covered, Earthquake, right? So a year and a half ago, 2 years ago, we had an earthquake out. I think it was Rehoboth. It was on a Sunday. That Monday, my phone rang for like the first 6 hours because people were freaking out because there was some damage done to some homes. Earthquake in Rhode Island, unless it's endorsed on your policy and in this area, is never going to be covered. You need what they call earthquake insurance. You go out west, right? California, Oregon, Washington, sometimes depending on the loan, it is mandatory. It's almost similar to like a flood insurance policy if you're in a flood zone. Again, it's never been mandated out here because we don't get earthquakes, as often as they do. It is not cheap. It is not cheap. So I'll be honest.
Even though it's rare, like
it's rare, but typically earthquakes do substantial damage, and that's why it's not cheap. Because again, if they're paying out a total loss on a home, they're not going to make it something that's affordable. If they're paying out, $500,000 on a home that needs to be rebuilt. Again, I've probably in my career with LaPointe, I've probably only done maybe 20 or 30 earthquake policies. How it's written out here is you have a home insurance policy, and earthquake is just endorsed on that policy. They're not cheap. We're talking a few $100 a year. I mean, I think that's expensive for an earthquake policy. Again, if it ever happens, you're covered, but if not, it's not gonna be a pretty scene, So, poor workmanship, right? I try to find a picture of like what poor workmanship looks like. It's not the best picture, but I guess you kind of get the point. Is never gonna be covered by home insurance. So what does that mean, right? So home insurance is there for a disaster, right? If you have a GC going to your home and they're redoing your bathroom and they decide that, they want to do a tough job or not a good job on the piping, and that pipe breaks, bursts because of their negligence, your home insurance policy is not going to cover you for that. It's very similar to maintenance, right? Home insurance is not a maintenance policy. So if your home has a 25-year-old roof and it's at the end of its life and the shingles are worn and we have a rainstorm that destroys your roof, chances are you're not covered. So keep that stuff in mind. Again, like, I'm not the one in and out of these homes every single day doing these open houses. I try to, again, be as diligent as I can and ask the right questions, but I'm not perfect, right? You can miss stuff like that. I think as a realtor too, you can, if you're not looking for the right stuff, you can probably miss stuff like that as well too. So you see those things, again, definitely want to address them. The last thing all the way up top, right? Any insect or rodent damage, right? So termites, carpenter ants, those are the things that, again, pre-existing, not going to be covered. So if you see those things, you definitely want to have that addressed, because we've been in situations before where, someone's buying a home, they close, 6 months later, they're saying, hey, I have termites, need to file a claim. Again, not gonna be covered there. It's pre-existing conditions on that, all right? Any questions there, guys? Good. So I wanna talk a little bit about flood insurance. Right now, flood insurance is a very, very hot topic on the insurance end. Again, we've had like one of the worst summer, spring, and falls in 40 years. I think we had rain like every weekend, except for 2 weekends this summer. So it was a bit concerning. I live in North Providence. I don't know if you guys have saw on the news, a couple months ago, but right near Branch Ave, I live off of Mineral Spring, but I have to go through Branch Ave. And at the base of Branch Ave, a strip mall that had a McDonald's, there was a liquor store, there was a sneaker store, and a Five Below, they got flooded out. I happened to be like driving through that, I'd say about 10, 20 minutes before like it actually flooded. So long story short, this strip mall in Providence on Branch Ave, total loss. There's 5 companies, and again, I drive by it every day going to my office. Restoration's been there for the past 2 months. Again, we're talking total losses, right? Why? Because this is a part of North Providence that you wouldn't expect to get rain in. We had 3 or 4 days of rain, and we had this monsoon rainstorm that just literally flooded this whole area. So yeah, it's sad. It was a wake-up call for me because, again, living in North Providence, so that happened like a Monday or Tuesday. The rest of that week, a lot of my clients that lived in the area happened to call me for flood insurance. I had one client sent me a video on my phone of his backyard being flooded by a neighbor's like downspout. And it was going into his in-ground pool, it was an absolute disaster. He was always like, hey, I need a flood insurance policy. So it is a hot topic right now. And again, the worst part of my job is telling somebody, listen, you're not covered because you didn't have the right policy. So I try to really cover all my bases. Most times with a new purchase, if I know a home's close to a body of water, close to the shore, I'm gonna look at flood myself, because the last thing I wanna do is say, listen, hey, here's your home insurance quote, great. Oh, by the way, does your client know that you need flood insurance too because you're in a flood zone? Again, as a lender, that's probably like a nightmare for you, because now you're like, well, listen, I accounted for X, Y, Z for home insurance, and now this home's in a flood zone. I didn't check, now they need this, and that's another X, Y, Z a month. So we try to be as diligent as possible. I'll be honest, I don't do this for every property. There are properties that I've run home quotes for and ran a policy and bound it, and then 2 weeks later, they're trying to get a C to C, and it's like, oh, we need flood insurance. All right, well, let's look at it.
I would also encourage to reach out to you because, that last situation I had, my system is built in, and Home Depot was basically saying the property was in a flood zone. I had to reach out to you, find out otherwise. That saved the borrower, obviously some few $100, whatever, per month. So
the big thing I point out is, what is the definition of flood? And this is like public knowledge, right, from FEMA's website, right? So flood is, again, a general temporary condition of partially completed inundation of 2 or more acres of normally dry land, right? And I think that's the key there is, normally dry land. Most of the surrounding area in Rhode Island is normally dry, but again, if we get a hurricane or we get 2 weeks worth of rain, there are conditions that make this property or this acreage no longer dry. So that is, I think, the key, right? Mud flow, collapse of land, again, that's all tied into flood insurance. One thing that's not tied into flood insurance or flooding per FEMA's definition is erosion. So again, you could be in a property where you're not in a flood zone. I've had this happen before where you have a property right against a body of water, not in a flood zone because of the elevation, but the land behind that property is eroding. That's not covered by flood. So if you had to file a claim because of that, FEMA would technically deny that claim. So again, keep that stuff in mind. I don't know how often you guys inspect the properties surrounding. I would imagine most times you do. But yeah, if you see that stuff, you see a river cutting through a property or a small brook, if it's overflowing or eroding, it could be a problem down the road. So kind of keep that stuff in mind. So how is a flood zone determined? So I always tell this story. I have a street in Newport, Rhode Island. I insure 5 houses all on the same street. This is a true story. 2 of the homes are in a flood zone, 3 are not in a flood zone. Why? Because 3 of those homes are elevated. So how is a flood zone determined? Again, it is determined by its distance from a certain body of water, but the way FEMA looks at it is, has it had a history of flooding in the past? B, and what's its elevation. That's really how they look at it, and the reason why this street in Newport, 3 of those homes are not in a flood zone is because they're up like 200 feet higher than the other 2 homes. So keep that stuff in mind. Don't assume, and I always do it too, assume that because a home is close to a body of water that it's in a flood zone, because chances are if the home's high and out of the floodplain, it's not gonna be there. What are the common flood zones that we see in our area? So V, A, and X, right? So the 2 big ones to look at, anything that's outside of an X zone, so a V, you might see a VE or an AE, are gonna be a home that's in a flood zone that requires flood insurance. If you're a lender or realtor, I would highly advise, let us do the work here for you, right? So we look at FEMA maps. I'm on FEMA all day sometimes looking at maps for clients and realtors. Reach out to me, okay? Again, you would be surprised at homes that could look like they're in a flood zone and they're not, or homes that don't look like they're in a flood zone and they are, vice versa. So leave that to us. It does not cost you anything, just your time. All I need is the address and I can look it up for you within 5 seconds. But reach out, the V zones you're gonna see again near the coast, right? Those are usually like your first row homes, I think that most realtors call them those, right against the water or 1 or 2 blocks from the water. A zones are gonna be homes that might not be next to the shore, but might be close to like, a pond or a river, or a lake. And again, your Zone X are gonna be homes that have no minimal flooding. Recently, they go over a 5-year floodplain, but that can change. Again, I had an issue over the summer where I insure a home in Putnam, Connecticut. I thought for sure this home was in a flood zone. It literally was on the back end of a lake. I look it up, it's showing Zone X. Great, we closed the deal. But 4 weeks ago, a client calls, he goes, hey, I got a letter from my lender saying I need flood insurance. I'm like, no way. Because of all the rain we had, that pond overflowed. It did damage the homes on the back end of that property. FEMA went back out, remapped the area. He's now in a flood zone AE. Yeah, so, and I've been through that situation before. So I don't like telling clients, listen, like because your home's in a Zone X, doesn't mean that it's in a Zone X. Perfect example is, I think 15, 20 years ago, the Patuxent River overflowed, right? That Patuxent runs through like half the state. There were homes that were in Zone X, Warwick Mall, Zone X. It overflowed, it damaged the Warwick Mall. Now Warwick Mall is in a Zone 8 because of stuff like that. So again, they go by not only the elevation, but prior flood history. When that river overflowed in Rhode Island a few years ago, that was a 1 in 100 year storm. So again, flood zones can change both ways. They can go from X to being in a flood zone. They can go from being in a flood zone to being out of a flood zone. It really depends on the flooding history for that area, okay? Leave this to the professionals, guys. Again, if you have homes that are even questionable, reach out. Hey, Al, I got a home that is in Cranston and there's a river behind it, is in a flood zone. Let's look it up. It takes me 5 seconds to do, okay? Because you don't want to be in a position where you're telling a client, hey, it's not in a flood zone, and then a week before closing, they're saying, oh, I need flood insurance. Like, what do I do, Some good news here. So flood insurance has had some recent changes over the past year. So almost about a year ago now it's been, whenever a client needed flood insurance, the flood insurance had to coincide with the type of loan that the borrower was utilizing. Any government-backed loan, right? So FHA, VA, those loans had to go with government-backed flood. There's only one government-backed flood company. It's FEMA, right? It's the Federal Emergency NFIP, right? So National Flood Insurance Plan. So now that law has changed, and it's kind of cool because we've really seen flood insurance rates fluctuate, and almost for the better. Before, FEMA's rates were just, probably the worst rates out there. As an agent, right now we have 10 companies that will write flood. So again, we can also shop out the flood for you as well. But I'm finding now more so that FEMA rates are almost in line with private flood market companies. So the good news here is that, again, regardless of what type of loan structure you have, it changed last year, you can go with any flood insurance company, whether it's private flood or FEMA. This is public knowledge, right? It's been broadcast. I've had the ability to tell a lot of realtors and lenders this over the past year, and people were like, oh, I didn't know that changed. It's not like it's going to be broadcast on the news by any chance, but it's more so just, your agent may or may not advise you on that. So again, if you have these issues that come up, questions that come up, let me know, but no problem shopping this out for you. And again, the good news here is that rates have been very competitive really over the past year, and there's been some good changes there. So again, I tell people, not as a scare tactic, but when we have a natural disaster or the walkie that we've had over the past year, like look at, we're getting, west coast of the US hitting with hurricanes, the west coast of Florida is getting hit with hurricanes, like you don't see that stuff often, like it's gonna change the game. Insurance is there if you need it, but when it's there and policies being paid out or claims being paid out, like something's gotta give, I don't see insurance going down over the next 10 years anytime soon, and insurance really isn't meant to decrease, it's meant to be there so when your home values increase, it also increases. But I feel like, we're gonna see a pretty big spike over the next year. We're in a hard market too for insurance. I think I mentioned that earlier, right? So what that means is that a lot of companies that are out there that we're writing business are either just not writing business or writing specific business. You got companies that can't keep their doors open because of the amount of claims that are being paid out. We're seeing that as well, and we're just seeing changes. We're seeing companies that, may have taken a two-family home last year, they're not taking a two-family home. Or they're saying, hey, listen, we'll take this home, but is X, Y, Z gonna be done? So again, from an underwriter standing, from our standpoint, it's a grind. And it's a grind because of the fact that, these companies wanna be able to cover their butts. So if we have a massive storm or hurricane or flood in this area, they're covered. Florida's rough, man. Right now we have a lot of companies, and I don't write down there, but from what I see and hear from some of my colleagues that do write down there, there's companies that just don't want anything. We have a company that we write up here. We actually, the CEO actually came to our office about a month or so ago. And it was an awesome, humbling experience, honestly, because he just gave us so much info on, the industry itself. He's based out of Tampa, Florida. And he was like, I have my top agents that, they're doing millions a month in premium, and I got to tell them no, that's a tough spot to be in as well, So, this too shall pass, just like the way rates are right now in the mortgage industry. If you've been doing this long enough, that, these things pass. I mean, from an insurance standpoint, this is the hardest market we've had in 65 years. So, when I sit down with my bosses and the owner of the company, then they reassure me that, this is gonna change. It won't be anytime soon. I think the big thing that I can probably express to, real estate people is set the right expectation, right? If your client's spending X, Y, Z this year for home insurance, good chance that next year they're not spending that. It's gonna go up, And I think that's what it comes down to, is really just educating people the right way. If you don't work with an agent or you call someone like a Geico or, Amica, great companies, they're not gonna take a deep dive into what your client actually needs. Yeah, they'll be there to help service them, but they're not gonna go over stuff like this. They're not gonna tell your client, listen, this time next year, your policy might go up a little bit or a lot because of this, this, and this. They're gonna say, oh, here's your policy. Lender, here's your binder. Let us know what else you need. Email us at, info@amica.com, right? So I think, and I told the group yesterday I was talking to, it's gonna be more important over the next 5, 10, 15 years to work with the right people in the industry when it comes to real estate professionals. I think as an agent, our job is just it's demanded more because of the fact that, again, you're not gonna get the same experience out of a box store company. So again, knowing the ins and outs of the laws, the changes, the guidelines, that can be huge to some people, and maybe not to others. If you are a lender, and I mean, I don't know, Justin, how many people you have experienced that know the law that changed last year, but I'm still telling people today, listen, this law changed last year, and they were like, oh, I didn't know that. So it's those nuances I think that are really going to separate agents, right? Agencies like us from clients going to the big box store names, and that's fine. But I think it really comes down to how can we help educate these buyers more and just set the right expectations. That's what it comes down to, But yeah, Florida is, man, they're in their own little world.
Right?
Yeah,
weather patterns, right? What can you control?
Yeah, well, like I said, my parents, they've been down there for 3 years, and again, they live in Clearwater, West Coast, and they've been hit with 3 hurricanes in the past 3 years, and they haven't had a hurricane down there in 55 years, So it's a matter of time. I mean, I think we're overdue up here in the Northeast for a big hurricane. I said that this year. I figured we'd get something, but I think we're overdue for, a big one up here. And again, this is why we have insurance, right? It's there when it's needed, Awesome.
Definitely one of those things you want to get out in front of,
Yeah.
I mean, that's the general point, right? I mean, get you involved as soon as you can.
Yeah.
If you have any questions about any of that stuff, because,
Well, you don't want to be blindsided either. Again, like you don't want to go into, set an expectation and then it's like, well, listen, like now because we didn't know the home was in a flood zone, now like your loan needs to get restructured or you don't qualify. Like, like I don't like telling you, hey, listen, like, it's more money because that's going to make you think, oh, they don't qualify for the home anymore. Like we don't want to do that. So how can we take flood insurance? So again, like I said, reach out to me directly. We go through the FEMA maps. I'm on them pretty much every day. The one thing I will say is homes that aren't in a flood zone, you can still get flood insurance. Yes, it's typically affordable. One of my properties in North Providence, I have flood insurance on it. It's like $300 a year, so pretty cheap. It will not only cover the home itself, it'll cover anything detached from the home, so garages, structures, things like that. You can get coverage for your belongings as well, all right? So anything in that home. So if you have a finished basement, you have furniture, clothes, stuff like that, you'll have coverage there. Rule of thumb is for every 1 inch of water, it can do 25 grand worth of damage. So kind of keep that in mind, which is crazy to even say that. But yeah, so you can imagine you get 1 inch of water in your basement, you can lose, clothes, shoes, electronics, stuff like that through on the ground. So, and again, you can either go private flood or FEMA, depending on which option is the best price for you. So quick recap here, and we'll wrap up here, and I'll do some Q&A stuff. So just some things I think, again, as a realtor, as a lender, how you can help your clients really take a deep dive into this when the time comes for home insurance, right? So right off the rip, I said it earlier, working with a home insurance agent, it gives you just more options. It's my job to kind of help your client fit that box around them when it comes to home insurance. Every client has different wants, different needs, different expectations. The worst part of my job is telling somebody, hey, like I don't have something for you. And I have not done that yet and don't plan on that. So again, using an agent, it's a one-stop shop. So keep that in mind, all right? When you buy a new home insurance policy, inspector comes out within a month or so after closing. Why is this critical? Because like I said, if there are things that need to be addressed, whether they're roofing issues, plumbing issues, pets on premises, we have to make sure things are being done to, again, mitigate any risk down the road, okay? Market value, rebuild value, not the same thing. So again, the cost to rebuild the home is not the same price as what you're buying it for. Different homes require different types of policies. So again, I wouldn't write the same owner-occupied home as I would a home that is being tenant-occupied, as I would a condo, a multifamily home, etc. Home insurance does not cover flooding. So we get that weekend worth of rain, your basement floods, don't call Al Robinson at La Pointe Insurance because I'm going to tell you that your home insurance policy is not going to cover you for that. But we can get your flood insurance policy, right? And then again, flood zones can be changed on flooding history, okay? That's really all I have. Do you guys have any questions for me? I want like the hard questions today.
I'll shoot one at you. So what's the situation with dogs? Explain a little bit like what kind of cost that.
Yeah, so I said it earlier, I don't know if you were here or not. The dog breed isn't really gonna change the policy much. It's gonna change the company that wants to write it, right? So animal liability is a separate insurance. So if your dog bites somebody, it's a different policy that you need on your own, not attached to your home insurance policy. What the insurer looks at is if this dog does damage to the home you live in or someone else's home, right? And that's the way they look at it. So some policies, like pit bulls, right? We'll insure a pit bull, no problem. You can get animal liability. Your home will be covered, and then so will any dog bites. So that's kind of the way you have to think of it, is like, the non-risky breeds aren't really going to change your policy much. Right. $20 for the year. Like, you have a black lab or a lab or a, cocker spaniel. That's not going to change your policy by a lot.
What's their take on some of these like newer designer breeds like XL bullies and stuff?
They want pictures. Yeah, it's very granular. So it's, hey, we have clients say, hey, I have a mutt. Like I have one I'm working with now, I have a mutt. Well, what breed is it? Do you have papers? Because if that dog bites somebody and your vet says, hey, this is a pit bull, they're gonna want that. Right. And we've had companies ask for vet papers. Listen, do you have any papers? If you don't, we won't be paying a claim for you. Right. So it's granular. Dog bites are one of the highest claims paid out per year. So yeah, I don't want you to get in the habit of telling your clients, like, don't tell your insurance agent you have a dog, because no pun intended, it can come back to bite them in the butt. but don't get rid of your dog also. You know, I mean, it's heartbreaking because again, like I get it, like insurance is a very price conscious industry. You want to get the best price for your home, but like at the expense of your dog. Like I mean, let's find a way to make this work. And that's usually what it is. It's, oh, you have a pit, I can tell you a million times, right? I'm on the phone with a client, I'm going through the motions, getting all my information, and I come to, oh, do you have any dogs? And you kind of get that weird, like, awkward pause.
And then he barks in the background.
Or yeah, that, or it's like, yeah, oh, well, yeah, man, like, I have a pit bull. That's all right, well, that's fine. Like, as an agent, we have options. So, like, it's not gonna be, like, end of the world. Like, you'll pay.
There's this stigma, like, it's this huge cost.
Yeah. And I'm a dog person, same thing. Like I understand it. Like I'm on the side of dog owners, but like the stats show that, dog bites are one of the biggest paid claims that happen, and now it's almost like it's not dogs biting people, it's dogs biting other dogs, right. So there's just so many variables amongst it. So yeah, honesty, man, is the best policy. And again, like the restricted list is pretty minimal, I mean, it's like pit bulls, Dobermans, Rottweilers, German Shepherds, Huskies. Some companies don't even are fine with that though, but yeah, like it's pretty granular, I mean, if I'm asking your clients for a picture of their dog, it's because it's warranted, That's a great question. What else?
I have cats and sometimes they're vicious.
Don't call out.
No, so it's funny. I was actually gonna put that as one of my recap moments. Yeah, cats are never a problem on a home insurance policy. I've never seen a cat attack claim.
Though. Oh my gosh.
I've never seen a cat attack claim paid out. In my short time. Yeah, furniture is a different story. But I think the logic behind that too is like, if you have $1,000 couch and your cat scratches it up, like you're not gonna call your insurance to file a claim for one couch, I don't see why an insurance company wouldn't pay it out, but I also feel like too, there's probably a better way to like just go around that.
I didn't even know that they cover that. So a question about the flood. So basement flooding, if it's not a flood zone, can you do something specific? Like if the hot water heater blows up, if that is covered, is that covered in a normal policy or not?
If it's if the hot water heater blows up, like example would be like in a fire, right? Is that what you're asking me?
No,
just dies.
Just dies
because it's old.
Water,
not covered. So that's normal wear and tear. That's the price of being a homeowner. Yeah. So if your hot water tank, like happened in my houses a couple years ago, explodes, right?
Can you do that specific policy? Just if any of my water equipment or water pipe blows up.
Yeah. So yes and no, right? So that's why I'm telling you yes and no. So a home warranty program is going to cover you for something like that, right? To replace the hot water heater. But let's say the hot water heater explodes, right, and does damage to your basement. Your home insurance policy would pick up any damage done, but chances are wouldn't cover the hot water tank unless it was deemed that, the water tank was damaged by like a fire or electricity or something like that, right? Okay. So like damage done to the home because of the explosion, yes, would typically be covered, but I've seen claims paid out that, hey, they're gonna replace drywall, sheetrock, et cetera, and rebuild your basement, but not pay for the hot water tank, as crazy as that sounds, So I would say home warranty would cover you for like, a mishap with any main system, like a hot water tank. Frozen pipes is gonna be a home insurance claim all day long, given the home was heated and, the heat was not left off. But yeah, if water tank goes, generator goes, heater goes because they're old, that's never gonna be covered by your home insurance company.
And can you say like, I just want like natural disaster type of insurance, or is that just?
Yeah, so the term that we would use, I think it was on there, is AOP, so all other perils. So a peril essentially is a natural disaster. The definition is very strict though. So again, like there are perils that are not covered. Right. So there are perils that are not covered by a home insurance policy. If it's excluded in that policy, it's going to be written, listen, this does not include wind, hail, lightning. Like acts of war is a peril, but it's not covered by your home insurance policy, as crazy as that sounds, right? You were asking me though, like as far as flood insurance, can you get a certain amount of coverage? Is that like what the question was? Did I answer it?
Yeah, you did.
Oh, yeah, all right, cool. Yeah. And if your home is not in a flood zone, right? So flood zone X, you can essentially get whatever amount you want. The rule of thumb is if the home's in a flood zone, it's insured to the lowest of the home's rebuild value, the home's market value, the home's rebuild value, the loan amount, or $250,000. That's the lower of those three. Okay, anything in excess of that won't go FEMA. It has to go with private market. And there's also excess floods too. So if you have a home that is $1.2 million and want the whole rebuild, has to go private market excess flood. So you have options there too. Okay. What else? That's a good question though. Maya, I see you thinking about something. Hopefully I didn't overwhelm you guys today.
I'm learning everything.
Yeah, I think that's pretty much it. I think the way I'll probably end is, how we can help you. We want to be a resource, right? So when you work with an insurance agent, whether you're a client or you're a referral partner, like there's no fee. Like we're essentially a free service. A question that we get is, hey, I work with a point insurance agency, am I paying more? You're not. So we're a free service and more so a free resource. I love what I do. I'm passionate about what I do. But I also like the challenge. The best challenge for me, and I put our referral partners up here because again, that's a bulk of how I get our referrals, my referrals anyways. But I love those, hey, it's Friday at 3 p.m. and title company ABC's calling me for a home insurance binder because this guy or gal never got insurance. I like being put in those situations. Because we do pride ourselves on the quick turnaround time, so we can do those things and have the ability within our agency to do those things. But I just, I kind of like the pressure. I do like being relied upon, as bad as that sounds. But I think we also understand that, in the hierarchy of the real estate transaction, we're the second to last piece of it. People are usually getting pre-approved, then going out, shopping for their home, then, getting their lender involved, getting a closing attorney. So we come very late in the game. I do like the fact that, again, we are very heavily relied upon. And I think, it is a testament to the way that our agency is set up, so we have 33 people in-house, Dan? What do we have? Yeah. Of those 30 some odd employees, 20 of them just do home insurance. So it's very one-sided, but again, it's a very well-oiled machine. And I can sit here and tell you that because, I've seen it, I've witnessed it, but I also have had lenders and agents be like, hey, I've never seen this before from an insurance. It was such a great experience. So yeah, if you have worked with us, I would say if you can leave us a review, that's great. If you haven't, I would say if you have an opportunity to have clients that need insurance, let us know. Very easy when it comes to getting the info we need, home insurance, right? So with the way that our industry is kind of changing, again, when I first started literally 5 years ago, it was taking all the info down on a pen and a paper and running it through our hopper, our quotes. Now, if you have tech savvy clients, they can fill out my link for home insurance and have a quote in hand within a day. So all the info I went over earlier with what we need, right? So is right on this link, and I can email this to you guys too. But again, it's going to ask really all the questions we need. What does the property contain? Is there a wood stove? Do you have any dogs? Is your primary residence? So again, as long as the client's filling this out the right way, they can get a pretty accurate quote. I would say a very accurate quote. It's pretty rare that, if the info is just misconstrued or, not there, that the quote isn't accurate. But this is, I don't want to say it's the best system, but it works well. And this is kind of the way our industry is going, right? Everything is kind of now. I mean, you can go to companies like Lemonade. I don't know if you've seen Lemonade Insurance before, but you can get a quote within 30 seconds. That's the way our agency and industry is going. So we also have to keep up at the same times, and I think that's kind of what separated us from other agents is the fact that we're kind of already doing these things that in 4 or 5 years is going to be critical to really just helping us grow as an agency, but more so helping our referral partners, grow too. And don't get me wrong, I'll call somebody to get a quote. I have no problem doing that. Whatever works, best for your process works for us, But this is kind of the way that our agency is going, and it's helped out substantially too. So, what else? All right, cool. I'll be here for a little bit, so if you have any questions, let me know.
Thank you.
Absolutely, guys. Thank you.
Thanks, Rob.
Thank you. Yeah, absolutely.